Hola guys, ¿qué pasó? This is Hala Pablo. What's going on? Welcome to another crypto analysis video. We're going to be looking at a couple coins today, a couple tokens. We're going to be looking at Bitcoin. We're going to be looking at, we're going to be looking at SHIB. We're going to be looking at Dogecoin. We're going to be looking at BAT. We're going to be looking at API3, and a couple others. Right now, Bitcoin. So I think we found pretty much the bottom. I said in another video that I speculated anywhere between 18 and 16,000 was the bottom, according to what I was getting from the VSA readings. And I still think that. The reason I think that is we got some serious preliminary support that came in right around the $20,000 range. Now, the preliminary support in Wyckoff terms is just that. It is preliminary. It's setting the stage. It's saying, hey guys, or hey bears, the party's about over. It's going to be turning on the lights. It's the closing time at the bar, where they start fucking flipping on the lights and shit, running the vacuum cleaners. That's kind of like what this is in the trading sense. So when you see this big volume spike like this coming on the tail end of a massive markdown, especially the one that we just had, and you see suddenly a spike, it means that, hey, closing time is getting near. It doesn't mean that it's over yet. It still has some way to fall, but the brakes have been put on, and the traffic lights turn yellow. It's not green. It's not the fucking Autobahn anymore. We're getting a yellow caution light. So that's what that is. And sure enough, it went down a little bit more, and then we started getting predominance of demand, right. We got another demand spike coming in here, and this is noteworthy because this was during a consolidative period. After it came up, it trapped there was a bull trap here, and then it went back down to basically to the selling climax, consolidated a bit more, and then during the consolidation, although we have have an increase in supply, we had a demand spike that overtowered all the supply preceding it and the supply that followed it. So that is really important. Little things like this that you pick up on with VSA, that shows you a lot forensically of what some of these whales, these smart money guys are doing, what they're plotting out. We see, number one, we see the preliminary supply coming in here. Goes back up to the automatic, just sort of like an automatic rally, where it comes back up, it comes back down again. We closes out this lower liquidity void, and we get a floor. We get some semblance of a floor with 1, 2, 3 touchdowns. This is before the what I believe is a shakeout. I believe this is a terminal shakeout area here, which we could have a double shakeout. We could go back down and revisit this at some point. That wouldn't be surprising. That wouldn't floor me if something like that were to happen. In fact, I could see it going down even more to maybe to the 16 area. I don't think it's going to go down to 10. I think we have a pretty good support here. I think we had pretty good evidence of demand coming in at these key junctures, and here as well, some more demand coming in here, where the demand obviously isn't predominant. We see during the terminal shakeout that the supply is larger than the demand. Nonetheless, though, it came back up almost as quickly as it went down with two double volume spikes, demand spikes, that pretty much did the job. It came back up, it mitigated this order block, and it showed signs of strength. And from here, it's been just a steady up climb. We're just riding it out as long as it lasts. We could draw a regression trend from the spring up to where we presently are, and yeah, we've got slight predominance of demand. We see that these spikes demand volume bars are standing out from the supply bars. I like to say it like this: it's like, imagine this is like a city skyline at night, and these are the skyscrapers. This is like the Empire State Building, you know, the ones that stick out. The Chrysler Building, if we're talking about New York City, the World Trade Center, back when, you know, the Twin Towers were there. Those are the buildings that stand out the most. And the buildings that stand out the most on this skyline happen to be demand buildings, the green buildings. So that kind of gives you just an eyeball way to look and discern what the off-the-cuff predominance of whether it be supply or demand, who's got the bias at any given moment. And so I would say demand at this point, although not by much, not by much. So it remains to be seen. We do have on the pullbacks. Here's a pullback here. We do have harmony with the or rather divergence with the supply bars increasing in the volume as the price action falls. That's divergence in supply, which is strong. It's good for supply when it does that. It means that the pull-offs, I mean, people are really selling off at that point. Here's another one where the volume is increasing on the pullbacks. So that says that the bears still have control, guys. But then we also have predominance of demand, and we have an increase in demand on the motive waves that are correcting. So it can go either way at this point. We're just going to have to see what it does. So keeping an eye on Bitcoin. Don't be surprised if we go back down to retest and close out this liquidity void at 17,000. And then just to slaughter the bears for good. I wouldn't be surprised if it dips down to another 1,000, maybe down the 16 area, to just destroy a bunch of shorts. But if we see that, I think we're going to see reversals, and it's going to just shoot back up, and it's going to be face melting, and it's going to trap a lot of bears at the bus station with suitcases in hand and their stupid Hawaiian shirts, ready to go on vacation, thinking they got it made, and the buses are going to take off and the planes are going to take off, and without them. So as it returns back to paradise, heading up to paradise. So that's something I think we got to watch out for. Bitcoin is notorious for killing bulls and turning around and then killing the bears. So it's an extremely difficult an elusive asset to trade. So, and that's why it's the king. So, all right, Celsius token. Real quick on Celsius. Celsius is doing great. Remember, I did this chart back on the 17th, where I I predicted that we were looking at a major consolidative effort for Cell token, and I was predicting 90% minimum gains, and 90% gain would take it to the 1.618 Fibonacci from where it was back on the 17th. Boy, did it do that. It blew right through. If we do the price action on this, it goes all the way up. If we play out the chart on it, it goes all the way up almost to the 3.0 Fibonacci. So boy, did that ever go through. So that just shows that they're prevailing in this short squeeze. And had you put money in this, I can't buy Cell token because I live in the United States, but this would have been something that I would have put money down on, and you see how it would have paid out. So yeah, the VSA prevailed again. Of course, the diminishing supply and demand showed me that it was accumulating, that the market makers, not the retail guys, the market makers, the institutions, the banks, the endowment funds, the hedge fund guys, those guys with the real muscle that make this move. When you see signs of accumulation, it means that the powers that be are buying tokens. They're accumulating at a very careful and almost like a secretive price range, to not let on to the retail sector, guys like you and I, and to other market makers even, that they are on an accumulation campaign. With the end game, of course, to bring in demand at some point, inflate the price on a markup, and then sell it, dump it on people people that are FOMOing in. So at that point, so if you know, that's what happens when you chase those green candles, man. You're buying you're oversold goods. So anyway, so we saw that with sell, and I'm going to continue to keep an eye on it. It looks like it's gone back. It's retraced back to the 2.0 Fibonacci, and it's going to be reaccumulating here. I wouldn't doubt it. Put another leg up. So we'll keep watching that, and just good job with that short squeeze, and just, you know, killing all those shorts. Yeah, those guys, man, they deserve it, those bastards. So, and then Dogecoin is another one. Dogecoin was a few days ago. I did a chart on TradingView for Dogecoin where I saw the predominance. Look at the predominance of demand here. Even though we're going sideways and the spread is still kind of wide, we're seeing these large, just these wide swaths on these Elliott waves here, and it's coming up. Nevertheless, we have an increase of demand each time the motive wave goes up. We see demand increasing, so we have a correlation or harmony with it. And so, and then on the pullbacks, you see this ABC correction right here. We're seeing supply being decreased on the pullbacks, and so that to me is a bias. That shows a bias of a reaccumulative effort, which means that at the end it should go up. And so I hypothesized that it would go up. So I said there is demand emerging on the 4-hour, and let's see what happened on it. And yeah, it's marking up. It's marking up. So right now it's gone up almost to the to the 1.272. I think it's going to go all the way up to the 1.618. Should, and that's irrespective of Elon Musk tweeting. That's just going off the VSA. So if it goes up to the 2, that would cancel out or close out this liquidity void or mitigate this bear block up here. And so I could totally see that happening. We're going to keep an eye on Dogecoin as well. All right. Another crypto that I've been looking at here is, let's see if I can pull it up. I think it's API3. API3 is one to keep an eye on. This one has had a steady climb. Let's go down and do a regression trend on the selling climax, bring it up to where we are presently. This is the current ascending channel where we are. I am seeing a possible flip. See this top of this trend right here. The top of the trend on this double bottom. It almost looks like an Adam and Eve, or if you zone out even more, it could look even more like a cup and handle. Whatever it is, these are quite often bullish continuation patterns, and when you see it break the micro trend, like it came up here, broke the trend, came back down, and now it's reconsolidating along the micro trend. More often than not, if we have demand, if we're getting demand spikes in that vicinity, more often than not, it flips the resistance to support. Now, that is yet to be seen what it's going to do here, because we do have equal parts. Well, we do have a slight predominance of supply here, but that could just be because it's testing the new floor. And if the new floor prevails, then we're going to have, we'll have a new support zone here. And that means that we could look for further upside in API3. I was going to say AP13. Let's see, AP13, and we could conjecture that this is going to go up another to the, let's see where we are presently, 1720. Oh, if it goes up to the 2, that's almost 25%, 25%.